In terms of the broader market, we've seen sort of treading water but close to highs. So what's got to be the next catalyst? Is it earnings season?
Yeah, I think generally speaking, we set ourselves up nicely for a benign equities environment. We took the Fed off the table. Rates are now low, inflation intact, GDP growth in line with potential, perhaps even somewhat above potential. That's a nice backdrop for equities. I think for a next leg higher here, one, you need the earnings story to work, and two, you need a nice second half recovery globally. We're starting to see that in China a little bit. We'd like to see Europe stabilize, and we'd like to see the U.S. continue to show this momentum.
We always talk about the big run we've had year to date, and clearly that has been very strong, and questions whether we can go further in the short term. That said, on the other side, you think cash levels are still quite high for most portfolios? Yeah,
it's interesting. We're up about 23% now since the December 24th lows, almost in a straight line here. But when you look at some of the fund manager surveys, one, cash levels do remain high, and two, managers are somewhat underinvested in equities still. So a lot of these managers are continuing to watch for a pullback, a dip. They're looking to get more involved here, especially as we're seeing earnings come in above expectations and, China starting to show green shoots, et cetera.
Larry Fink said last week on this program that he thinks a stock market melt up is more likely than a meltdown. You think that's the case?
It's funny. I don't think we're seeing excessive greed or excessive optimism right now. And in that environment, markets tend to do well. They have to climb walls of worry here, and that tends to help markets grind higher. So if we can climb the earnings wall of worry, if we can climb U.S.-China trade, if we can climb Brexit eventually, I think these are things that will help the markets move forward. So I don't know about a melt-up scenario because I'm not seeing the excessive optimism right now, but I do think the bias is to the upside here.
When you look at some of those results, Coke, Kimberly-Clark, Procter & Gamble, do you think the U.S. consumer is pretty strong?
Yeah, I think that's one of the themes we're watching in depth this quarter, especially. We're seeing signs that the U.S. consumer has remained resilient. We heard it initially from the likes of J.P. Morgan, Jamie Dimon talking about a strong consumer. We've been hearing it from several Fed officials as well, and now we're starting to see it in earnings results. We're going to be watching the Staples company. Companies like Walmart and Target, who reported earlier this year, actually, said the same message. So we're hopeful on that front.
The one thing that surprised me is the strength of the overseas consumer. And you get that from all of these companies, too.
Yeah.
Procter & Gamble talking about how it's able to get organic growth because it's coming out with new premium products.
Yeah.
I mean, that is not something you might have anticipated 3, even 6 months ago.
No.
If you were looking at China, India, any of these markets.
Yes, I think the GDP slowdown a few months ago was worrisome. What we are seeing is labor markets across the globe remain tight. So it's not only the U.S. where unemployment rates are very low here. It's similar in Asia. It's similar in Europe. And so that is actually supportive of the consumer broadly. What we're seeing in the U.S., wage growth starting to accelerate, could be the case elsewhere as well. So I think that strong consumer is a global phenomenon.
When you talk about wages increasing, you're talking about the healthy aspect of it, not the inflation potential spiral that comes down the road.
Yeah, I think
draw
that
the Fed back in or other central banks.
Right. I think from a consumer perspective, very healthy. Great to see rising wages, even oil prices, which fell last year, a stronger dollar, all supportive of a consumer. The flip side of all of those are inflation is, perhaps the bogey in the second half of the year. Will we see that creep back upwards? Not seeing any signs of it right now. Like I said earlier on, this is a great environment when inflation's pretty benign here, earnings starting to accelerate. So yeah, good story right now. We'll see what happens in the second half of the year.